Hello, everyone. I'm Lisa Loud. I'm the founder and CEO of Fluidify. We make DeFi dashboards for institutions and soon to be retail too. And I'm very excited to introduce this talk, which is very dear to my heart. It's on the scalability of DeFi and the technology and where it's going in the future. And with us today to moderate the panel is Melanie Goldsmith. Melanie is deep in the metaverse these days, but comes from a background, Melanie from Parcel. She comes from a background in DeFi, was formerly at The Block. So she's seen quite a lot of what's been happening in the industry over the past few years. So with that, Melanie, I invite you to take the stage.
Awesome. Yeah. Thank you, Lisa, for the introduction, and thanks everybody for joining in. Just real quick, I'm Melanie from Parcel. It's sort of Zillow for the metaverse, and I came over from The Block where I was more focused on DeFi and breaking down the ecosystem. So I'm really excited for this panel today. And as you can see, just from looking at the title of the panel, we're going to be talking about scalability of DeFi and technologies used to achieve it. So just, I guess, some foundation for that. The way I think about it, more individuals have been participating in the DeFi ecosystem, which is great, but it's also brought an increase in on-chain transactions and sort of amplified pre-existing scalability issues. So Jacobo once said on a podcast that I saw that blockchains aren't actually designed for speed, they're designed for security, amongst other things. And there's something called the scalability trilemma, which means that a given DeFi ecosystem can have decentralization, scaling, or speed. But if the homeostasis around that is broken, one of them is forfeited a bit. So now we can sort of get into it. I'm going to go around and everybody can give a brief introduction of themselves. So I already mentioned Jacobo, so if you'd like, you can definitely, start us off.
Thank you, Melanie, and thank you for having me. So yeah, Jacobo Toll here, originally from Spain, based in Norway. I'm the CEO and founder of Nami. Nami is a Norwegian company, 14 years old. Our background was in content aggregation and distribution. We were serving 50 million users a day, and late in 2016, we started looking at this technology called blockchain with the sole purpose to leverage our knowledge of the content industry. One thing led to the other, and we ended up building a protocol that precisely scales the Ethereum network, which in many aspects is very well suited to discuss the topic of scaling DeFi. We're a team of about 30 of us, fully decentralized, and we're currently working not only on scaling Ethereum, but also on building DeFi and NFT ecosystem.
Awesome. Thanks for that. I realized I probably should have given you your own little brief introduction, but now we'll move on to Dr. Mo Dong from Celer Network. And Celer is a layer 2 scaling platform and blockchain interoperability protocol that, boosts the efficacy of like interchain functions. And I'll let you take it from there and tell us a bit more.
Yeah, great to be here, Melanie. Thanks for the intro. And I'm Mo. I'm co-founder of Celer. And what we have been building in the space is around the interoperability mostly. As you mentioned, like there is this kind of scalability trilemma in a single blockchain, right? So like this is a well known, but like how people are trying to break it right now is to really extend the entire blockchain ecosystem into a multi-chain world. Now, what's the trade-off brought by this new multi-chain paradigm, and how do you kind of fix that? How do you make more blockchain interoperable? Is what we're kind of working at. And for some of the statistics, for example, some solutions that are built on top of Celer, such as Seabridge, has processed more than $6.7 billion transaction volume over 29 chains for 150K users over the last 6 months. And that shows the traction, also shows the demands for this kind of interoperability platform. But like we're extending more than that, just from also kind of not just asset bridge, but also NFT, cross-chain message, and so on and so forth. So yeah,
awesome.
Great to be here.
Yeah, thank you. We're gonna tap back into some of those points soon, so I'm happy you brought it up. And next up, we have Joseph Weinberg, the co-founder of Shift Network, a protocol that meshed identity validation and compliance with blockchain technology lending privacy to the flow of data between centralized and decentralized ecosystems, networks. And Joseph, I'll let you also take it from there.
Yeah, thanks, Melanie. Good to be here with everyone. So a bit of background, I've been in the space since late 2010 as an early miner before we had other protocols, and scaling was an interesting discussion, and continues to be. So at Shift, we've been really focused on kind of this concept of programmable compliance and really looking at scalability from how do we enable a lot more users into the ecosystem from a usability perspective, and also what does horizontal scalability look like as opposed to vertical, which really does apply to Mo's discussion around interoperable cross networks and more networks. And so Shift is a layer 1 federated network, which I think we're going to see a lot more of into the future, and kind of this blend between fully permissionless open systems and these kind of federated systems that maintain decentralization, but that allow us to provide some sort of scalability improvements depending on certain types of use cases, like the ones that we've been working on. So excited to be here and excited for the discussion.
Awesome. Yeah. So next we've got Stanislav. I think he just joined us. So he's the co-founder and CTO of ScaleSwap, which is a decentralized IDO launchpad built on a layer 2 scaling protocol. So Stanislav, just if you want to give yourself an intro, I'd love to hear it.
Yeah, thank you very much. Pleasure to be here. Thank you for the invitation. My name is Stan Stolberg. I am CTO and co-founder of ScaleSwap. ScaleSwap is an IDO launchpad, and we call this the world's most fair IDO launchpad because our holders, our users, need to hold tokens of projects we launch in order to join next IDOs. By this, we solve the problem of this problem of the DeFi space where token holders just selling, flipping the tokens and ruining, dumping the space. So this is a concept developed by us. My background, I'm a physicist, worked in corporate and IT management in financial and insurance industry, but it was a bit boring, and so I switched 2017 to blockchain space, launched several projects, and ScaleSwap launched 1 year ago exactly is let's say the actual project where I'm co-founder. And yeah, so regarding scaling solutions, 2021 was a year of let's say of rise of DeFi, and Ethereum was very expensive. Transaction on Ethereum costs at the beginning of the year around $100, and therefore it was not suitable for microtransactions. At this time, layer 2 solutions appears like Polygon, Ethereum layer 2, Polygon and others, and we integrated Polygon as first launchpad, and now we have all EVM and also Solana blockchain integrated. Yeah, so pleasure to be here. Cool discussion. I'm looking forward.
Awesome. Yeah, super excited. So the first thing really that comes to mind in this, and some of you guys tapped on it already, is how does your project interact with the topic at hand? So if you want to get more specific, you could talk about which angle of scalability is your company or project focused on in terms of scaling DeFi. And you could run with it however you'd like. So I guess we can start off with Joseph this time.
Happy to. Yeah, we've always really been focused on, like what is it that brings the first billion users into these networks, right? And have done that in different respects over the last, several years. And when we started Shift, we kind of looked at it and recognized that, looking 10 years into the future, we started the project about 5 years ago when compliance wasn't a discussion. But, we realized that would become, the battleground of success in many respects. And so what we kind of were working on at the time was very closely with Blockstream around, federated systems design, which is the concept that, what is decentralization, and do all systems need to be fully permissionless and fully, all nodes have to, validate all transactions, and they can be as distributed as on Raspberry Pis or not, right? And I think the overwhelming consensus, at least from research that we had done at that time, was that there's going to be a lot of different types of networks that have trade-offs, right? And I think this discussion of scalability is critical because it's all about trade-offs. Any scaling layer 2, layer 3, sidechain, everyone is making a trade-off. We haven't really solved the actual trilemma. We're just finding new, unique ways of redisplacing the weight, right, or the data requirements, right? And so, the way we look at it at Shift, at least, is to say, federations are very, very useful in certain aspects, in very purpose-built scenarios. And they aren't, for everything. They're not trying to solve this open, everyone run a node problem. They're trying to solve very particular problems. But where we kind of interact with this space is in, once you have a federated system that is highly distributed, censorship resistance is at the core of what we believe decentralization is. And there's nothing more important than censorship resistance. So networks that are decentralized are largely just have an inability to be attacked, right? And can largely withstand that. And the question, therefore, is then, how do you distribute that across more decentralized networks, more open systems like Ethereum or Bitcoin or Solana and everything else, right? And so using proofing technologies and things is kind of how you, I think, all start to leverage the security guarantees of everyone and start to kind of scale in different ways. So that's kind of how we interact with it. But we've been really focused, of course, on like what is it that drives users into the ecosystem beyond this kind of critical juncture that we're at today. So,
yeah, that was an awesome answer. And just, I'm not going to get too tangential with it, but it really maybe should be not only the trilemma, but the next rung, because like then you have the whole UX UI experience with DeFi and security, which actually there's a panel for later. So I guess, Mo, if you would like to give your take on this, would love to hear it.
Yeah, happy to. So, I think just kind of going alongside of the trilemma, topic there, during the last 2 years, what we have seen in this entire space is that people are trying to solve this trilemma by jumping out of just the confinement of a single blockchain, right? So like you start from Ethereum, then you have, Polygon is the first sidechain that is being adopted. And then you have like Optimism, Arbitrum, and you have like so many different alternative layer ones that is also using the same level of playbook that is essentially a much lower cost chain to accept the overflow of demands from Ethereum. There are people, basically users, priced out by the high gas fee. Now, what we have right now is essentially a parallel, blockchain ecosystem where there are a lot of blockchain ecosystems serving users at the same time. However, we also have a very, very big problem, which is that all the DeFi or GameFi or application ecosystem are essentially replicating themselves to exact copy of the same thing across all the different DeFi or blockchains, right? So like you have the SushiSwap that are deployed probably now on 16 different chains. And if you look at SushiSwap, on each one of these deployments, there is the same liquidity pool of USDC, USDT, which is extremely inefficient because you're essentially spreading out the liquidity everywhere. Now you have a user fragmentation, you have liquidity fragmentation that is really, really kind of not efficient for trading purposes and liquidity purposes, but also a nightmare for user experience. Like you need to switch between this chain to that chain to remember where my asset is on this protocol on that chain or the same protocol on different chain. So this becomes kind of a total mess basically. Now so we're essentially trading off usability and we're trading off liquidity fragmentation with some additional scalability and the kind of capability to serve more users. Now, how do we fix all that? This is where Stellar comes in, where we are merging all of these decentralized and the parallel blockchains together, essentially kind of building a very unified kind of a multi-chain ecosystem, where from the user's perspective, they do not need to worry about which blockchain they're using anymore. They can just like have a one-click user experience and they use blockchain and use applications anywhere. And also at the same time for the developers, developers are looking at this blockchain will be in an entirely new way. That is, they are building across all the blockchains. They're now trying to build one application and deploy the same copy everywhere. So for example, if you're a DAX, you can essentially have the capability to say, okay, I want to concentrate my liquidity for a single pool on just one chain, but everyone who uses that particular liquidity pair can route their transaction from other chains to this chain to actually make the swap, right? You can also have the use case of a cross-chain lending, where you provide liquidity on one chain and then borrow liquidity on another chain. You can have a cross-chain governance, where like the governance vote can happen on multiple chains and then aggregate all of them together and propagate back all to all the different chains. So these kind of use cases become possible, and also greatly reduce the burden from the user, and also increases the efficiency of building applications for developers in this kind of a multi-chain world, right? So therefore, with this kind of a cross-chain functionality, you can actually harvest the scalability provided by this multi-chain ecosystem or multi-layer 2 ecosystem that were not possible before.
Right. No, that's super interesting. And, later on, I kind of want to hear your take on, I guess, maybe an ecosystem with a relay chain, or like a sort of just a basic Gnostic chain like Polkadot and Cosmos, and just see what you think about that in terms of like scalability. And so, Jacobo, do you want to give us some thoughts on that? Is there anything that these guys haven't said that you'd like to say?
Absolutely. I mean, I have personally found Joseph's point of view truly good, because I mean, as someone who has been building products for 26 years and been in the Ethereum world for only 5, our previous product, as indicated, was serving 50 million users a day. We got into blockchain just because of a necessity, and we end up building and scaling protocol even more because we were told that Plasma was coming. We got tired of waiting for Plasma. And then on the 1st of January 2018, we started building Nami. So we were pretty much one of the first layer 2s. We're currently on our second version. But what is truly important about what Joseph has said is that, or my version, or a small version of something that you have said, Joseph, is that building products is ultimately about pragmatism, right? And if, I don't know about the attendees to the panel, but if you look at the average mindset of the people working on the scaling around Ethereum, they have a single word in their minds, which is rollups. And rollups is just a pseudo bad idea coming from Plasma, I'm afraid. And reason being is because, again, it's important to remember where we come from. We were serving 50 million users a day. Some of us have had the opportunity to work in investment banking. So, for instance, in banking, every millisecond of latency costs to a bank up to $100 million a year, right? Yet rollups offer a multi-minute latency issue and awful finality, and the predictability of the fees is just not good. So our approach towards the scaling has been more holistic. And again, we have had to make compromises. Of course, we cannot give birth to a brand new set of mathematics to solve the trilemma. That's just not going to work. You just need to make compromises. The question is, where do you make the compromise? And then the answer is with another question: who are you building the solution for? Are you building the solution for the DeFi degen? Are you building the solution for this or for that? From our point of view, we wanted to build products that is scaled, products that can be used by the big boys in the industry that will bring the next $1 trillion or the next billion users. Ultimately, in our case, we compromise in one area, which is we're not censorship resistant, because if you would like to bring, hypothetically speaking, the JP Morgans of the world, those guys, they need to know that they can build their own walled garden and they can do as they find it fit. Now, does that break the ethos of blockchain and whatnot? Probably, but ultimately, goes hand in hand with how systems are being built, right? You need to give control to those who would like to build solutions that scale and they can have full control, apply KYC, AML, and whatnot. But of course, there are many other areas, like for instance, the predictability of the fees. So rollups, for example, do not provide you as a user with exact understanding of how much something is going to cost you. So then you dive into the area of the total cost of ownership. How much is going to cost you to build a solution on a layer 2 protocol? You as a company, you as a CFO, are you going to be able to fund this company or this internal product in your company to bring in 50 million users when you don't know how much it's going to cost you to run, right? So there are a wide variety of elements that ought to be kept in mind. And that is why you need to take a more holistic approach towards the scaling and comprehend who are you building it for, what problems are you solving, and why are you doing it that way. So truly fascinating. So thank you, Joseph, for the data points that you brought up. That was a fresh breath of air.
Yeah, thank you guys. And it's true. Honestly, I don't think they talk about it enough. Like it really is all about like who are we building this for? Just because they see like, certain protocols, certain projects, they really are like some are for devs, some are for, these participants that just onboarded, like that don't totally know what's going on yet. So Stan, if you want to hop in, you could let us know what you're thinking.
Yeah,
I'd love
sure.
to hear.
Thanks, Melanie. So my colleagues raised very important topic, and therefore I will come from it with another angle. As you know, IDEO Launchpad is launching projects. So we are incubating and launching blockchain projects. And just today we did a research how many blockchain startups there are out there. And it turns out there are 20,000 active blockchain startups. 20,000. If you compare this to the mainstream industries, even to software as a service products with millions of startups, you understand that we are still in very early stage. So, technology scaling is one point, but we need much more use cases and applications which make sense also, and not just blockchain because of blockchain, or blockchain to solve fly to the moon problem. What we see. Therefore, we are still early, and I'm representing IDEO or incubators, accelerators, IDEO launchpads here. And we need to work to find the best projects. We need to work to find the right approach to raise capital for this project. Because as for now, projects are raising capital and they not delivering, for example. Therefore, we need to change this paradigm. We need to implement roadmaps where projects, let's say, get capital as they deliver milestones, as they achieve some milestones. This is very important. And in general, we need to change also a mindset of blockchain ecosystem participants, because many of them, especially DeFi, they are very short-term focused. They are buying tokens of projects and they hoping to get rich in the next month. This is not working out. Therefore, we need provide a lot of information. We need to make people patient, to wait, to give a project time to grow. So, technical aspects are clear. So we have very cool technology with different blockchains, different layer ones. We can even think about using, for example, for a certain application, a part of application can use Solana. Another part as backup can use Ethereum, and so on and so on. So we can develop complex application now in blockchain space, but we need better use cases. And coming back to applications or to infrastructure, what we miss now is something like full decentralized cloud. Because if you take any blockchain application, let's take Uniswap for example, you cannot call this decentralized exchange, because parts of Uniswap are centralized. Front end is exposed on AWS. There are some microservices. So only smart contracts are decentralized on Ethereum, on other blockchains. Therefore, I think on the technology side, we miss this the full cycle of microservices, and we dream of decentralized cloud. And by the way, we at ScaleSwap have some projects which are trying to solve this problem. But yeah, so I see this as a future also. I know there are some attempts to make also, let's say, decentralized Oracle networks where there is interaction between real cross-chain decentralized interaction between different blockchains. This is also really important. So we are still early in infrastructure manner, and we cannot develop everything what we like. But it's also a very cool time to be. So we are still in 2020, at the beginning of internet, let's say, I would say, in blockchain.
Yeah. So you raised some really cool points. I guess first thing, everything is moving and fast forward, and I don't know how we're gonna slow down if we are. A lot of times I think of it like we're sort of developing like like a newly developing nation, the rate and like the cataclysmic speed that develops usually is just like totally upward like a hockey stick, and then it sort of plateaus a little bit. So, maybe we're still on that piece of this. And the next thing that I'm thinking is you focused on an interesting piece, which is we were just talking about, what we are focusing on in the field right now with scalability. And so I guess we can move on from there and kind of ask the question, what are people not focusing on that they should be? Like, have you guys identified any pain points that aren't super talked about right now, but are actually things that need addressing in order for us to like progress in terms of just like scaling technology, maybe like product suites?
Sorry, maybe I didn't got the question. So you mean if we have some very interesting fresh ideas or
so yeah, no, so I'm saying you started us off, so we can maybe start with Mo with this, and I think you focused on what are people not talking about so much that we should be focusing on. So Mo, if you want to kind of give us your take on that, is there a pain point that isn't super mainstream, that isn't being addressed enough, that we need to focus on in terms of scalability?
Yeah, I think I think a lot of sites are there. Like, for example, in terms of scalability, one thing that is not being looked at a lot is a very, very reliable infrastructure, right? So like in the early days, let's say when a new blockchain start to bootstrap, you don't have that much user, you don't have that much like application. So it's probably fine by just like having essentially an official RPC endpoint that serves all the applications. But as time goes by, these kind of situation will change and landscape shifts. Now, like, how do you have an infrastructure that can actually be very decentralized, but at the same time can handle a lot of loads? It's something that a lot of these new chains are kind of missing in the beginning, I would say, like especially kind of to handle the growth. We feel this because like we are the ones that are working on connecting all of them together. So sometimes like one chain will just not be responsive or kind of a dropping offline essentially. So these kind of things is we start to see them even though the chain itself provides good scalability underlying. But the surrounding infrastructure sometimes is not there yet, right? So like this is where we see as a big area of improvement for the community, right? So, but of course, like there's also the aspect of like how can you, onboard users easier from other chains, which is also something that is kind of missing because if there's a new chain spinning up, nobody probably have that particular gas token to pay for gas. How do you kind of convert users from other chains to this particular chain to acquire user in a very scalable way? It's something that is also missing, which is why we're also kind of doing, in our bridging infrastructure, the capability to allow users to get some dust airdrop whenever they're bridging from one chain to another. So that like when they bridge their assets, when they bridge their NFT across, they can immediately actually use that instead of being just like locked there and they're trying to figure out how to kind of get some of the native gas token. So these are some of the things that we saw that are currently missing, but like being addressed, of course.
Cool. Yeah, and so then I guess Joseph, Jacobo, whoever wants to jump in, I think you guys have like a slightly different perspective because you're dealing a lot with like KYC and potentially like these institutions. So on that end, is there something that people should be focusing on? Because you were talking about like, yeah, you do have to forfeit just a bit of decentralization if you want to onboard these institutions because there are KYC rules that you need to, take into consideration. So is there any like main point there that we should be thinking about?
I can maybe start. I mean, I think on like I think it's like, the ecosystem works very, very highly on narratives, right? And I think it's what I find interesting maybe is that there's been a constant push on just trying to maximize scalability, and the research has been focused on permissionless chains like entirely. And I think that's actually in partial like detriment to the ecosystem, right? Is like, you know, we're probably like one of the only we're the only federated like EVM, I think, in the space today. Definitely the only one that runs inside of Tor. And we've done a lot of like interesting innovations around like how you effectively solve, you know, a high degree of these problems. But there's not been many others that have been really focused on it. It's really been this push towards like, you know, how do we, you know, somehow try to move the different pieces of data, you know, in a different position to scale things, right? Layer twos and everything else. And I do think that that's, you know, I think it's, you know, partially just narratives and people believing in things, but like the reality of trying to get real solutions out is like, that is, I think, an interesting design space that people have not put enough time and attention into. And I think ultimately like that will be, you know, the middle grounding that occurs once we've gotten to the, you know, brink of these fully permissionless systems, right? Because there's only so many trade-offs, and like that's just the reality, right? Like as you know, Jacobo said, and everyone else has kind of echoed. So that's on one end. I think that like, yeah, being some of like the only people who have worked so heavily on compliance infrastructure across the space is a bit scary. Like, I think that's a bit worrying from our perspective. Like, you know, we have a lot of infrastructure we haven't released or announced yet. But just, we know that like we're among the only ones working on it. And like when you have so much regulatory pressure against the ecosystem, that's a bit scary to think that like you don't have much innovation in that end of the spectrum. Of course, that's an ideological problem, but like, you know, rubber meets the road. We need to like make these networks, you know, usable, and we need to make sure they don't, you know, get crushed under regulatory pressure. The honest truth is like governments do have a lot of power, and like we'd like to say decentralization kills that, but like, let's be honest, like we all live on a rock, and like you know, that rock has a bunch of laws on it, and like when it really comes down to it, like, you know, those laws and the direction in which they move do make systemic changes to the ecosystem. You know, these are organisms, they're rapidly adapting to their environment, right, as networks, but like, you know, bans and things like that are not good. And so how do we provide regulation as a protocol and other types of, you know, tooling to avoid that is, I think, the most important thing people can work on, but we don't have a lot of that today. And I think that's interesting. So
yeah. No, that's super interesting. Really cool way of looking at it. And yeah, it's true. A lot of times people always try to make the argument like, oh, how does this connect to the broader ethos of decentralization and blockchain? But sometimes, like you said, rubber meets the road, and you have to be like, okay, well, if we want this to actually work with current regulations, or, you know, even FAD like recommendations, then you have to implement it in this way. So Jacobo, if you want to add anything, you can definitely hop in. Otherwise, we go to the next question, whatever you're thinking.
Absolutely. I would just add a couple of points. First of all, to elaborate a bit more on what Dr. Mo has mentioned about the infrastructure, it's just to manage expectations as well of for the attendees to the panel. Reality is that the industry is still in its infancy, and a big percentage of the infrastructure that we're hereby talking about is in diapers. It is very, very immature. Data point, when we built the first version of NAMI back in 2018, Ethereum was still lacking some error messages. So we did the biggest deployment ever to Ethereum. And when things would fail, we'd go like, but what happened here? And so again, that is one point. And then to elaborate as well on what Joseph has mentioned, one common denominator I've come across in the industry is that most teams tend to innovate in a vacuum, and that is terribly, terribly dangerous. Now, the best way to innovate is to go out there, speak with customers, with potential users, with enterprises, with companies, with Bob and Alice and Carol, and try to comprehend what is that they need. And then from there, you draw the plan towards those features, either for compliance, KYC, AML, or whatever. It is, you know, we have seen some failed attempts of Bob, Alice, and Carol trying to add KYC to a smart contract by adding names and whatever to a smart contract, because this is decentralized, therefore it was Ethereum and needed to be used, a smart contract. Well, that's a fallacy. That doesn't work. You know, that is one way of 1,000 different ways to do it. You cannot implement that solution, take it to an enterprise, to a bank or to an institution and say, oh yeah, I've solved the KYC AML just because we are writing specific things to a smart contract. That's just not good enough. You need to be out there, speak with them, and not innovate by yourself, but instead listen and develop this level of empathy with potential customers and clients and users of your product. That's the best way to do it.
Yeah, no, that's awesome. Okay, so then I guess we can move on to just the next thought that I have was that, initially blockchains weren't really built with this scalability issue in mind. My opinion, Bitcoin was definitely not built on that premise. And so the protocols that we're seeing pop up, does any stand out to you guys in terms of like they're tackling, scalability the right way, or they're kind of, fixing the fragmented environment and putting pieces together? I think Dr. Mo, you probably have, some very strong thoughts on this. And so maybe we could start off with you.
Sure. Sorry. Like the question is, the Bitcoin is not kind of built for scalability, or like, yeah. So
Yeah,
I just want to make sure you get the question right. Yeah.
Sure. So if, initially blockchains like Bitcoin weren't really built for scalability. Now we're seeing, protocols pop up, let's say like Polkadot, Cosmos. To me, they're really focused on interoperability. Yes, they kind of have blockchains build on their, let's say, like relay chain. Like, how do you guys think, like, is it going well? Are these protocols thinking about it the right way? Or are there other people that are entering the field that like are tackling these issues of, let's say, like scalability and fragmentation?
Yeah, absolutely. So, I think Bitcoin, yes, absolutely. First of all, like Bitcoin was not built for scalability, but like, it had actually an agenda in the very early days to actually evolve. But like, because of the historical reasons, it's become a kind of a community consensus that this is why Bitcoin is valuable, right? So like Bitcoin is stationary. It is like what it is. It's having many characteristics, like cyber characteristic of like a gold or a reserve currency or something like that. But aside from kind of the asset aspect, like people in the smart contract ecosystem is pushing forward, right? So like I would say there are two streams of scalability efforts. One stream is on the single chain side. We'll talk about the relay chain part later. But like on the single chain side, we know there's a trilemma. We know everything has a fund. But it doesn't mean that like we cannot improve the entire trade-off curve, right? So like you have a trade-off point, but you also have like an entire trade-off point where you're essentially pushing every aspect of like a decentralization, security, and also scalability to the maximum, right? So this is what people have been working on for alternative layer ones, like essentially Cosmos-based ecosystem like Polygon is built on Tendermint, and also like Avalanche, like Solana. People are taking various different approaches to kind of explore this entire trade-off plane or trade-off space, essentially to try to kind of push the limit of a single chain to the extreme on all the aspects. However, what we have seen in the last couple of years is that the maximal level of daily active user, however kind of trade-off you're playing, as long as you're still playing within confinement of blockchain, where you have a distributed system and everyone is reaching consensus, the upper bound of like active user realistically is around 1 million daily active user, which is like tiny comparing to the level of the users that we want to actually accept in the entire kind of a world of a decentralized economy and decentralized world, right? So like now this is where people start to push for multi-chain scalability, which I would say Polkadot and Cosmos started early on. Like they saw that, okay, we need to kind of have a parallel ecosystem, but like back then it was more worked towards like specific application blockchains. There are going to be a one Polkadot parachain, and then there will be another kind of a Cosmos-based chain that are also essentially kind of a one part of this, right? So now different routes, but leads to the same result. That is, we need essentially a very, very large parallel world where you have a lot of blockchains to accept overflow of requests from various chains. And I think this is like how things end. I would say like Polkadot and the Cosmos ecosystem definitely has some vision front, But like, that vision also quickly started to change when we start to see more and more homogeneous chains that are not application specific, but are also very generalized in itself. And, Ethereum also have its own agenda by having a kind of a data availability layer that is highly scalable, but having all the execution layer on top of layer 2. However, like as I mentioned, this definitely put us into this essentially kind of expanded the entire trade-off space by adding a parallelism into the entire trade-off matrix. Right? Say, okay, we can keep all the three, but add parallelism to increase scalability. But we also start to trade off for liquidity fragmentation and user fragmentation. Now, what bridges are trying to do, or what interoperability are trying to do, is let's trade off something else for a unified ecosystem, right? So like bridge is not kind of coming for free, right? So bridge is trading off for liquidity, provision, to essentially having this kind of a mutual liquidity layer across all the different chains to have this capability to move liquidity freely, to move a function call freely, to achieve achieve a really kind of a unified blockchain ecosystem. So we're essentially trading off the liquidity from the ecosystem to a actual kind of usability here, essentially, right? So, but that's, I think, is a very, very worthwhile trade-off here, because the entire blockchain is filled with liquidity, and liquidity is very fluid, and you can actually kind of utilize that to the maximal point to actually achieve further growth for this entire community. So yeah, that would be my 2 cents on this.
Yeah, that was a great answer, and super comprehensive, and that sort of leads me into, I see Selena in the chat wrote a really good question that has to do with like cross-chain interactions and interoperability. So whoever wants to hop in can take this. So she said, cross-chain seems great for scalability, but does it come with security risks? So, if anybody wants to hop in, like, what are the security risks, I guess, associated with cross-chain interactions?
I can raise this point because it was exactly what I had in mind during Dr. Mo's speech. So if you speak about multi-chain, and we are living in the multi-chain space, we speak about centralized bridges. So we can imagine blockchains as ecosystem, and between these blockchains there are centralized bridges which are governed by a centralized backend. What is the problem here? The problem here is very clear. Centralized bridges can be broken and can be manipulated, and we see this very, very frequently in different big news, like this bridge was hacked for 100 million, another bridge was hacked for another 100 million, and so on and so on. It leads us to the understanding that we need a real cross-chain bridging concept, where the bridge itself is decentralized, the bridge network. And what I see on a daily basis is dealing with startups. There are very cool concepts how to solve this problem. You can regard these projects as layer 1 networks of decentralized bridging. So basically, in order to bridge something, to bridge liquidity from one blockchain to another, you need to find a consensus within different nodes of another decentralized system. And this would make it very secure. And I see this as, let's say, a missing part. And I believe we need to work very hard in this direction in general. And the good point is there is some projects which are working there. And now we call this beer time with blockchain. So hype is over, hype of 2021, and I like this beer times because during these times, very top-notch projects of next generation will be developed. It was the same with all big projects. With Solana, it was developed during the beer time, and with many others. So I'm pretty curious to see what will come next during the next hype cycle. What I expect, hopefully, let's see, maybe end of the year, maybe next year. Yeah, my 2 points here. So decentralized bridging is required.
For sure. And Dr. Mo, I just want to give you, I want to give you a chance to, say what you're thinking about that, just because I I know it was a really big deal when the Stellar Bridge came out, and so yeah, if you want to
Yeah,
hop
definitely.
in.
So yeah, happy to. So like, yeah, absolutely, I agree. Like, crossing bridges should not be centralized. And we saw a lot of like bridging hacks recently, like, rolling hack, wormhole hack is like hundreds of millions of dollars lost. Like bridge, it becomes a trend that bridges are usually hacked, basically. Well, so there are, several things that we really need to take care when actually building bridges, right? So, like the first thing is that on the architecture side, on the design side, it has to be a fully decentralized system that is resistant for attack from the first place, right? So, for example, for Setter, the Setter itself is actually interoperability platform, but the messaging passing layer between all these different chains, which are connecting all the kind of message paths, is itself actually a blockchain as well. So it's actually a layer 1 Cosmos-based blockchain. So it comes with the layer 1 level of security that is already exists in Polygon, in Cosmos, in Osmosis, in all these other different blockchains, right? So so that's first part. The second part is that even in the case of like worst kind of a nightmare comes true, that the entire consensus fails in this middle chain that is passing information, we still have the capability of optimistic rollup like a security model, where you can trade off some additional delay by enhancing the security model from trust 2/3 of the one at least 1/3 of the stake to the security model of trust any, right? So basically you have the capability to quarantine any cross-chain message with a mandatory delay, and having the entire system, every individual nodes of the entire system, including the application itself, to cross-verify the source of the information coming into the destination chain. If there is a mismatch between the source and the destination chain message, the message path can be cut, essentially cut off during that quarantine time, so that there's no actual damage done on the blockchain itself, right? So this kind of design decisions, helps to make the entire bridge a more scalable and also kind of a secure environment that are also fully decentralized. Now, if we're looking at the perspective of implementation and operation, right? So like you should, every bridge ecosystem should have the capability to have like a essentially rate limiting, risk control, and also the capability to have like the 24-hour monitoring. Because like, for example, for the X Infinity and the rolling hack recently, it took the ecosystem about 1 week to actually find out the hack, which is quite astonishing actually, for all of us, right? So like, but I think bridging space or interoperability space is definitely very, very new, because it's a kind of a new layer that is generated because of this parallel blockchain and multi-blockchain war, and it will evolve very quickly. Just like the early days of blockchain itself, like the layer 1 blockchain, it also has some security incidents, but I think like the entire community is pushing forward to reduce that as a whole and make the entire ecosystem a better place, especially with like a lot of bug bounties right now are also being spun up. We are offering about a $2 million bug bounty on EmuFi as well, to kind of essentially recruit the entire white hat hacker space to help us and stand with us in this process. So I think that's definitely gonna get a lot better over time.
Awesome. Yeah, if any of you guys want to hop in, feel free. But I'm thinking now about, a lot of the times, if not most of the times, just in more, maybe like mainstream blockchain conversations, the scalability issue always like circles back to gas prices, and people are like, yeah, this is how much I paid for, this Ethereum transaction, in 2020, 2016, 2017. So, what is the relationship really between gas prices and, scalability, and how does that differ between blockchains like, Bitcoin versus smart contract blockchains like Ethereum?
So
Yeah.
who wants? So
Go
the
ahead.
question is
Go ahead.
how is the connection, right, between the gas prices, and the connection is really clear. So if you take Ethereum network consists of different, as for now, validators. As you know, Ethereum is moving towards fully proof of stake, but this movement takes many years of time, and they delayed this every time. And I think this summer should be a next update, which moving us towards this proof of stake networks. The proof of stake network should make the transaction very, very cheap once Ethereum fully transferred to this approach. And we cannot predict price of Ether, of course. If I could, I would be a very rich man. But I think as for now, we are in the transition, and because we are in the transition, we have a lot of validators who do not want to switch, very fast to this new proof of stake. And I see the gas price is also connected, of course, to this, because there is no consensus within the whole Ethereum ecosystem. If it would be a consensus, then the price could be much cheaper. Let's take Polygon network, which is exact one-to-one fork of Ethereum. And Polygon has a much lower number of validators, and the price is accordingly very low. And if you take Binance Smart Chain, which is again copy of Ethereum by technology, it's a centralized blockchain where they can put whatever they like for the gas price, right? So there is a token, let's say, and the demand of this token is let's take Ethereum token or Binance Smart Chain token. The price of this token is dictated by the market, how much transaction is executed, how big is the belief in this token, right? Why the investors are buying this token. This is one story, and another story is how to design the transactional prices. These are two different topics, I would say. It's not, there is no 100% correlation.
Yeah, right. So I'm realizing now we're getting close to time. So there's a really good question by Lisa in here for Joseph, if you'd want to take it. She said, do you think KYC pools will take over in the future, attract institutional finance, and become the expected standard? So I don't know. I think that's a really cool thing that we could dig into for a second.
Yeah, it's a good question. I mean, I don't know if takeover is the right word for it. I do think our perspective has always been that these systems are about providing optionality, right? Freedom is the right to choose, right? And our ecosystem has done a terrible job at actually giving options in choice, right? We have built in one direction, and as a former maximalist, before there were other options, that was the way that things were designed, and I think that that's largely been the case still today. But these networks were not designed to be anonymous. They were not designed to basically destroy the state. They were designed to be transparent and better at enabling more openness and freedom. And so when you think about optionality, the idea that we choose to not build systems that suit and cater the next wave of people is kind of crazy. Getting away from regulations forcing us to do it, it's the size of the traditional financial system is many orders of magnitude bigger than what we have today. So will they take over in liquidity? I think yes. I think our time horizons are pretty far out for that, to be honest. Just to be we're working on something right now that's solving a lot of the problems that are inherent in that, because it's not as simple as throw KYC at a smart contract, block the smart contract. You break a lot of DeFi composability by doing that, and so you actually need to solve a lot of other problems like composability and rules creation and a lot of these regulatory problems, and do it in a way that scales at least across some networks, if not all networks today. So that's what we've been focused on. That'll be getting released in the next few months, but built it with partners, as Jacobo says, like, build with your market as opposed to just building in isolation. But I do think that they will become dominant insofar as liquidity will become much larger in those environments, right? And I do think that those will be big counterweights. But yeah, I do think it attracts institutional finance because they're waiting for clarity and regulation, and they just can't play in the world that we've built today, right? And so, short answer is yes. But yeah, we need standardization of that infrastructure, and we need to actually look at all of the problems, not like throw KYC at something and now it's solved, because that's actually what everyone who's attempted to do it today has done, realizing that it doesn't actually work. Yeah, hopefully we can provide at least of a few solutions to that standardization. But yeah, that is the future, I think, indefinitely. But the question is, you need to make sure that openness and the existing system is not put in jeopardy. That's the biggest thing. Give everyone option, because if we force everyone into systems that are only KYC and compliant, we lose a lot of the ecosystem. And so it's about balance.
Yeah. I mean, that's a great perspective. Honestly, I agree with it, but it's also like now sometimes people are hesitant to even say that they agree with that take. But at the same time, it sort of leads us to just the final question. Maybe Jacobo, you could take it. It's 5-10 years down the line, right? Like realistically thinking through the timeline, where either do you want this to be, or where do you think this is actually going to be in terms of scalability and the products out there?
What I would like is earlier in time is all of us to, or just to be more inclusive and bring in more engineers, less researchers, and people with hands-on experience building systems, not incubating or not innovating in a vacuum, but instead having that level of empathy and listening to what those companies and those potential customers and users of your product will need. That will take us really, really, really far from where we are today. I mean, back in 2018, we were already trying to bring in enterprises or companies and large, and it was complicated because we were speaking two different languages, right? I mean, layer 2 today is a hot topic. Back in 2018, we did look a bit weird speaking about layer 2. So what I foresee though is again, I very much agree with Joseph's point of view. We cannot dictate the rules of engagement, right? We cannot say it is going to look like this. We have to have a level of flexibility. We need to make sure that the ethos of what this technology was meant to be still prevails. Change management is the biggest problem in every single industry. I've personally been involved in projects we had $2 billion of budget, and 10% of that it was for change management, or even 15% of that. So I do think though that by seeing the rate of innovation that has happened in the last 2 years in adoption, we're going places and very fast, much faster than most of us might think. And I don't think that we need to look 10 years down the road. I think that in 4 or 5 years we will see the first handful of very solid products bringing in 50, 100 million or 1 billion users. So, but again, we need to be more welcome, and we need to humanize the message as well, because blockchains are complex. Decentralization is complex. Trustlessness is speaking like a very, very weird language for most people in the world. So it is our job to educate as well those third parties, to make them feel welcome and have that level of empathy to help them to build the solutions that they need. That is our job.
Yeah, and I agree. I'm sure everybody else seemed to be nodding along. It's a hard thing to disagree with, and I think that's actually the perfect point of wrapping this panel up. So thanks everybody for tuning in, and thank you guys panelists for hopping on and letting us know your unique perspectives based off of your unique and awesome background. So this was super cool, and the hour went by pretty quickly.
Thank you for having us.
Thank you.
Yeah, thank you so much.
It was